there are a lot of people who don't understand this asset. They're going to buy it, and it's going to work, and they're going to feel great, and they're going to think, hey, I made 3 or 4 times my money, and they're going to sell it, not realizing that it's going to just keep, as he says, it's going up forever, Laura. I mean, this thing, unless we're wrong about this being adopted as the base layer of money, and I see no evidence to suggest that's the case, these coins will be, 100,000, then they'll be 400, then they'll be 1 million, then they'll be 4 million, then they'll be 10 million, and the time frame on all of that is probably 20 years because, Microsoft started in the early 80s, and here we are 40 years later, that it's the multi-billion-dollar company that it is. So this doesn't happen overnight. But the point, as you raise, is you don't want to sell. It's like Manhattan real estate, as he said. You don't want to sell a cornerstone asset that can't be replicated and can't be debased just because you have a profit in it.
Bitcoin has captured the attention of many investors worldwide. Just this month, the cryptocurrency's price surged to an all-time high, igniting a frenzy of excitement that has only intensified since. In 2024, Bitcoin has outperformed nearly every other asset, providing investors with staggering returns. However, amid the renewed enthusiasm for Bitcoin, myths and confusion surrounding the factors influencing its price are also on the rise. Over the past month alone, the price of Bitcoin has skyrocketed by nearly 70%, showing signs of a powerful phase believed to be a boom and bust cycle. Many are now waiting for what comes next, with some investors wondering if they should sell their Bitcoin while the price is high. In a recent interview, Larry Lepard of Equity Management Associates expresses firm belief in Bitcoin's potential, urging investors to hold on to their Bitcoin despite the price fluctuations. He notes how many people tend to make impulsive decisions, especially when prices surge. While selling Bitcoin now may bring short-term profits, Larry advises against it, noting that it could mean missing out on much larger gains in the future. Let us now view clips from the interview as Larry Lepard shares his insights. As we show you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more similar videos. Make sure to stay through the end of the video where Larry Lepard explains why he thinks Bitcoin will become the foundation of global currency.
If we go to 200 and it dips back to 100 and you paid 200 for your last bunch, don't panic. Look at it historically. I think the volatility is becoming less over time. There's some evidence of that. But having said that, I think everybody needs to be prepared to deal with the volatility, and everybody needs to think long term. And because long term, I'm quite confident that this is going to be a multi-million-dollar per coin asset. And so if you're buying it at 72 today, you're feeling. I mean, it feels like you're paying too much, but one of the great stories from Madeira. Somebody told me they knew Max pretty well. I guess when Max was buying his first coins, he paid. This is Max Kaiser. He was paying 50 cents, and he felt like he'd overpaid because Trace Meyer, who's a true OG, was buying his at 30 cents. So, I mean, pretty much everybody who's in Bitcoin feels like they're too late and they're overpaying until about 5 or 10 years go by. And then you're thinking, and people are going to be saying, what do you mean? Hang on, you have one whole coin? I would just suggest to people that are looking at this and listening to this, that they take the time to really study Bitcoin and understand it at a deep level. Because, one of the things, we all try and orange pill people. And sometimes I think we forget when we're orange pilling them to help them to understand how volatile it can be. As a perfect example is, if you were orange pilling people a couple of years ago and this, when it was in the 50s and 60s, and then it dropped to 15. I had some friends who, when it dropped to 15, they thought they, made a mistake and they sold it. And that was the wrong thing to do. And I think, people need to look at the history of the asset, understand that, it's higher highs, higher lows, but there are big drawdowns. And so, you don't want to use a lot of leverage with this asset because of these drawdowns. And you want to in general aim to more dollar cost average as opposed to plop buy. And so that you don't find yourself in a situation where you need to sell your Bitcoin when the price of Bitcoin is on a drawdown. Because I think everybody who's been in Bitcoin for more than 4 years, generally speaking, you gain purchasing power. Yeah. But sometimes, in that cycle, you would lose purchasing power if you bought it and a year later it had fallen. So I would just caution everybody to understand the nature of the asset and to think to understand it deeply enough such that if there is a drawdown, you won't be tempted to sell, because in fact what you should be doing is buying that drawdown, not selling it. I bought my first ones at $300. Not enough, obviously. That's the other feeling that's the feeling everybody in the space has too. I wish I'd bought more. Well, we all do. That's just the nature of it. But buy what you can because it's a superior savings technology, and then, sit back and go live your life and do things you enjoy, knowing that your money is not being debased, which is a very comforting feeling, right? Sound money would restore, sound values in the country, and the country is way off the rails. Anyone looking at it, anyone living in it can understand that and see it. And although there are a lot of good things about the country, there are a lot of ways we've gone in the wrong direction. When we get to the stage where we've got, a Bitcoin standard or a sound money standard, things are going to be incredibly good, much better. But we need to get there, and we need to, there's a chasm that we have to cross, and we're not even, out over the middle of it yet. We're just getting started on that crossing process. Yeah. But once we do cross it, it will make the world a much better place. So, I'm quite bullish about the way the world is going to look, and for your generation, my kids' generation. Yeah. But what you've described, they're all suffering. They're all in their 20s. They're like, "Hey, Dad, there's no way I'm ever going to be able to buy a house," and I get it. And they're all doing fine, and I get it. I mean, it's the system is really broken, and that's why it's as we all say, right? Fix the money, fix the world. I mean, and you've got all these political people pointing fingers at each other, many of them not really realizing what the core issue is. And the core issue is the unsound money.
Larry believes that the current financial system is deeply flawed, with excessive debt and inflation eroding the country's economic foundation. He suggests that transitioning to a system based on sound money principles, such as a Bitcoin standard, could lead to significant improvements in the world's economic outlook. Despite the volatility of Bitcoin's price, Larry remains optimistic about its long-term potential, even stating that the asset could reach $10 million per coin. He advises investors to maintain a patient and resilient mindset, emphasizing the importance of thinking long-term rather than reacting to short-term fluctuations. Let us now go back to the interview as Larry Lepard shares more of his insights.
The big picture is the things that we've been warning about for some time now, many of us for years really, but more recently, the last few years, are all starting to kind of come together. $1 trillion of debt added in 100 days, and record deficits, no spending restraint by Congress, the approval of the ETF and the multiplier impact that's had on the price of Bitcoin. And as we know, it's kind of been a relentless uptrend, strong and up to the right since 50,000 when the ETF was approved. And there's another thing. Probably a lot of people didn't focus on it, but I did, and it's a big deal. There was a letter from the Industry Swaps and Dealers Association to the Federal Reserve saying, "Hey, you know what? We really think you ought to throw away this SLR, this limit that you place on the banks and their ability to buy Treasury debt." And of course, the reason for that is that there's a lot of Treasury debt to be sold, and the number of buyers are slowly but surely shrinking. And if you really read through the lines on that carefully, and it's a lot of inside baseball and monetary plumbing, it's more or less kind of QE infinity, or it'll give the banks the ability to just in an unlimited way monetize the debt. And put it on their balance sheet because they don't have to count it as reserve, and so they can more or less print money to buy the government debt. So it hasn't been approved yet. It was a letter, but it's clearly those kinds of things. They start with a letter and then they come with a Federal Reserve proclamation that this is what we're going to do. And they did it in 2020, and they did it in 2020 because at that point in time they needed to do it because they were having a hard time selling the debt then as well. So to me, it's a big deal. Got to be serviced. There's not enough income to service it. They will have to print the money to service the debt. The printing of the money will dilute the monetary stock, which means the purchasing power of every monetary unit will be less. Full stop. Yeah. So, as an investor, you need to own assets which the government can't print. Right. So, Bitcoin is the best. Gold is up there. Real estate's up there. Good monopolistic stocks kind of count. Et cetera. So. There are ways to protect oneself, and I think people have to do it, right? Property is taxed, but it's generally when it's physical property and it's real estate taxes, and it's the local authorities that want, that provide services for the property that justify the taxation. They haven't gotten to the point where they tax, investment property until such time as it's a realized gain, and that would be a big bridge to cross. But it wouldn't surprise me. I mean, they'll be looking. I remember there was some talk. Bernie Sanders and others were talking about trying to tax billionaires just on unrealized gains or on their net wealth. And look, a political system which is failing, which needs money, is going to, they're going to flail around and try and get money wherever they can. And so I think it's certainly one of the risks with Bitcoin. I will say one thing. I respect Michael a lot, and I think he's right that it is property. But it actually could, over time, it could become more than that. I'm not sure if he believes this or not, but I actually believe it will ultimately become the base layer of money, because it will be a form of money that's the characteristics of which are so superior to the alternative, which is the dollar. The dollar will fade into existence, and we'll have sats will be the new basis of the monetary system. But admittedly, that could be many, many years out, and I might be getting ahead of myself.
Larry's recommendation to hold Bitcoin aligns with the concept of dollar cost averaging, a strategy where investors regularly purchase Bitcoin over time, regardless of short-term price fluctuations. By consistently acquiring Bitcoin, investors can mitigate the impact of market volatility and position themselves for steady growth over the long haul. Meanwhile, Bitcoin is said to be nearing a crucial phase termed the danger zone, historically associated with price dips before halving events. Analysts, like Rekt Capital, predict potential fluctuations based on past trends. Previous halving cycles have shown significant price drops 14 to 28 days before the event, such as a 40% decrease in 2016 and a 20% dip in 2020. Rekt Capital's earlier forecasts of a pre-halving rally followed by a pre-halving retrace gained traction as Bitcoin surged in February, surpassing previous highs. Despite these warnings, industry leaders maintain optimism regarding Bitcoin's long-term prospects. Richard Teng, CEO of Binance, expressed confidence in Bitcoin's potential to exceed $80,000 by year-end during an event in Bangkok on March 17th. Teng attributed this positive outlook to increasing institutional adoption, particularly evident through substantial allocations from institutional investors via newly established United States exchange-traded funds, managing a total of $57 billion in assets. While acknowledging potential price fluctuations, Teng emphasized that Bitcoin's upward trajectory is driven by diminishing supply and growing demand. The volatile nature of cryptocurrency markets underscores the importance of cautious optimism as traders navigate through uncertainties leading up to significant events like halvings. As Bitcoin enthusiasts monitor market movements, the next few weeks will provide insights into whether historical trends continue to influence price dynamics. Whether Bitcoin adheres to past patterns or defies expectations remains unknown, but for now, Bitcoin seems to be making massive strides with no signs of stopping anytime soon. Do you agree with Larry Lepard's recommendation to hold onto Bitcoin despite short-term price movements? Share your insights in the comments. If you found this video helpful, we kindly ask you to hit the like button and subscribe to our channel for more valuable insights on cryptocurrencies and finance. Thank you for tuning in, and we look forward to seeing you in our next videos. As always, happy investing.